Twilio announced their earnings, and today prices gapped higher, only to move several dollars lower, despite the company beating on the top and bottom lines in its latest earnings. Let's get into the specifics before we can get into the analysis. The company raised its profits outlook for the year and reported again quarterly sales and profits that top analyst estimates. Twilio, known for its communication services such as direct-to-consumer messaging, has been grappling with a rapid slowdown in revenue growth. It has also focused on improving profitability, announcing 2 rounds of layoff over the last year. In the second quarter, sales increased 10% compared to analyst expectations of $981 million. They actually earned a little over $1 billion. However, it marked Twilio's slowest rate of growth since becoming a public company in 2016. The software company projected revenue in the current quarter that fell short of estimates. Sales in the third quarter will be about $985 million. Analysts on average expected $1.02 billion. All right, now Twilio became and got on my radar as a result of a Cathie Wood's interview she did recently. And she stated the following. She said AI was Twilio got on my watch list as a result of a interview Cathie Wood did several weeks back. She states that NVIDIA was an obvious AI play, and earlier this year she sold her stock in NVIDIA and bought Twilio, as she thinks that Twilio could be a game changer in the AI race with its unique approach to messaging and voice technology, and could be a major player in the future. Before we get into the analysis, let's get into this video where she explains why she got out of NVIDIA and started buying Twilio.
Of ARK Invest. Cathie, thanks so much for being with us. Let's start with NVIDIA. Walk us through that decision, that process, why you judged that name to be overvalued right as it was taking off.
Yeah, so we started our research on artificial intelligence, actually when we were studying the possibility of autonomous vehicles way back in 2014. NVIDIA at the time was $5. That's on the split basis, $5. Now it's closing in on $450. So we rode it all the way up until mid 300s, mid to high 300s in the flagship. Sold it because we saw the inventory problem brewing. That was a good call. Got back in the fourth quarter when it cratered. And then it just took off after ChatGPT, while all of our other stocks, many of them AI driven, I would say most of them actually, were still very, very weak. Mm-hmm. And just to give you an example, NVIDIA was at 25 times revenues, while Twilio, which we think is going to be a huge beneficiary of AI, was at 2 times revenues. So we were making a valuation judgment call. We had done very well, 5 to 350 to 400. And we also kept it in our more narrowly focused portfolios, but took profits there as well.
Taking profits, sure. What makes Twilio sort of a better player to have in your portfolio or your ETF right now than an NVIDIA?
Well, I think a lot of people understand that NVIDIA is just an incredible play on AI, and it is priced accordingly. I don't think many people know that Twilio, if you use Uber, then the communication around Uber is powered by Twilio. So Twilio has roughly 1 trillion consumer business interactions per year. Now, who are going to be the winners in AI? It is going to be companies with visionary managements, good distribution, global in this case, and proprietary data. Twilio has data on business to consumer communications that no one else has. And we think the secret sauce and the real beneficiaries of AI are going to be those with proprietary data, the biggest one being Tesla. More data on real world driving miles than all the other auto companies and tech companies focused on autonomous in the world.
All right, so if we go to the monthly chart, we can see price did form a double bottom recently. However, price, if on the weekly chart, hit a seller's level at the $77 level, sold off. And in fact, that price could not get back to that level with all these wicks kind of indicated that price was going to sell off. If I go back to the weekly chart, the sell-off is going to continue until we get definitive closes above this 13 simple monthly moving average. Going back to the weekly chart, how far can price move down? Well, if you look at the weekly chart, these two green extended range candles indicate that there's no buyers anywhere until you get back to the recent lows of $40 to $45. Now, for the bulls, there is some hope. Price right now is at the 200-day moving average, and that should serve as dynamic support. However, if you get definitive closes below, again, on the daily chart, you can see, as we discussed on the weekly chart, there are no buyers in these candles anywhere. So if you get several closes below the 200-day moving average, price can continue to trend down, which would be an opportunity for those who want to get into Twilio and haven't gotten in yet. Now, what's interesting is that we did have a golden cross. That's where the 200-day moving average 50-day moving average closes above the 200-day moving average. However, high time frames dictate what where price is gonna go next, and all these wicks signify that there's going to be more selling pressure. Again, the fact that there are no buyers anywhere near current level, price can continue to decline. So, I don't know if Cathie Wood's decision to get into Twilio by selling NVIDIA was her best trade idea. Nevertheless, Cathie Wood has been on fire this year. So, and also her long-term time horizon, which she always put first, might benefit her in this Twilio play. Nevertheless, Twilio sold off on slower growth, despite being top and bottom lines, but there's more downside risk in the stock. Thanks for watching. Subscribe. Please like the video.